For the past decade and a half, high commodities prices have meant the good times have been rolling for African states rich in resources like oil and gas. Now, with oil prices below $50 a barrel, governments, industry leaders, and development institutions are focused on improving the regulatory environment and the business climate to ensure that these African states can diversify their economies. I'm here with Vera Songwe, West and Central Africa Director of the IFC, the World Bank Group's private sector arm. The IFC is also the world's largest development institution focused on the private sector. Thank you, Ms. Songwe, for joining me. Let's start off by talking about what has been the impact of the commodities price crash for Africa.
I think like in every part of the world, the first part of it is basically the loss of foreign exchange. One of the things that you see, because the continent is so diverse, we have different reactions and different impacts of the commodity price drop. In the largely oil importing countries like Senegal, Kenya, there has been, of course, terms of trade improvement because oil prices have dropped. In countries that are high exporters of oil, like Nigeria, Angola, Ghana, we see negative reverse terms of trade shock and depreciation of the currency. So I think what you have is different countries reacting and feeling the impact differently. More importantly is how they've reacted. And one must say, today Africa is the second fastest growing continent. And a lot of that is because they had put in place, many of the countries had put in place good policies over the last 10 years. And so the increase in commodity prices over the last 10 years allowed many of these countries to be able to restructure or begin the restructuring process of the economies. Now the drop is bringing to fore some of the areas that were left unaddressed. Energy in particular is one of those areas. We still had a lot of countries that had not yet diversified fully the energy mix, and with high energy prices, you had very difficulty diversifying the rest of the economy, because I think that many countries began the diversification process. We see in Ethiopia, we're looking at Nigeria. With the rebasing of the economy, we find out that Nigeria was a lot more diversified than we thought. Nigeria had also already been doing its budgets at much lower prices. And so basically the shock has been quite substantial, from $110 to $50 oil has created a lot of a gap on the fiscal space, which basically needs to be filled. One of the things that we do at the World Bank Group is basically come in on the World Bank Group side, particularly with the IFCs, to see how we can provide quick capital expenditure financing so that businesses can continue to produce while the system adjusts. We are a development institution, so we are in many of these countries for the long term. In the mining sector, most mines operate for 30 years. So even though there is a dip, we know that it will come back up. We know that demand on the continent, just given population projections, are going to be quite substantial. So basically, one of the things that we need to do is put in place policies that will improve efficiency. And you take the example, for example, of gold. We still have, the IFC is just investing in a new gold mine in Liberia. Liberia is becoming a mineral producer of gold very recently. Part of that is possible because the IFC is also investing in an energy IPP, which is going to reduce the cost of energy. 30% of gold production is fuel cost, and basically makes the mine profitable and possible to operate. So we come in to fill this gap, bridge the gap, make sure that, you know, new discoveries, 30% of the new oil discoveries on the in the world were in Africa last year. So I think that even though we see a dip in the commodity prices, there is still, the demand is going to be there over the long term, over 30 years. Populations are going to continue to grow. And basically our job right now, and the job of many economists, is to see how they begin to address the policy issues that are needed to make sure that they can ride the wave of the downturn. We've seen downturns in the commodity cycle. Basically, you see it almost every 10 years. And so I think that one of the strengths of the African economies is we see that we have managed to actually ride the wave. We've had some macroeconomic issues in Ghana, of course, but I think overall the continent has been quite resilient to the commodity price dip.
How do you see the approach differing for promoting growth in the minerals sector versus the agriculture sector?
Thank you. I think that's a very important question for two reasons. The first is the jobs aspect. We know that, and a lot has been said about the mining sector in particular not creating jobs, whereas the agriculture sector creates a lot of jobs. And even though we've seen a dip in the prices on the agricultural commodities sector, what we have also seen is strengthening of the policy environment in that sector on the continent, which has created a lot more investment. And I think overall IFC has invested in the last year a lot in the agriculture sector because there is interest. We have Olam, we have Cargill, we have the rubber sector in Liberia, we have the cassava sector in Cameroon. We're working on the wheat sector in Ethiopia has now brought into stream a lot more agricultural production. The reason being that, first of all, you're addressing the core importance of what we do as a development institution, which is poverty reduction and working with the poorest of the poor. This is where 80% of the poor population is. It's in the agricultural sector. And the reforms that are needed when you have dips in commodity cycles to improve efficiency also go through the agricultural sector, improving farm-to-market roads. We know that 40% of agricultural commodities are lost in transportation. A lot more reform is now being taking place with the World Bank Group. So I think that what has also happened is there is a refocus on the agricultural sector, but the importance of the agricultural sector, in addition to creating jobs, is also that it's a pathway to industrialization. So I think one of the things that's happening is a refocus on how we can industrialize through the agricultural sector. But the agricultural sector is also a very high service provider sector, it's a very high financial sector. So there is a way of bringing together both the financial institutions with insurance, the provision of insurance in that sector to improve the productivity of the agricultural sector. So while there has been a dip in the mineral commodities sector, the reforms in the agricultural commodities sector are actually going at a much faster pace. I think that what you're seeing is governments making more reforms on the agricultural sector, looking more at new technology that will improve productivity on that side of the commodity equation to ensure that we continue to grow and stay the second fastest growth continent, and why not the first eventually.
All right, well, thank you very much, Ms. Songwe.